Afternoon, boys and girls and teachers. Welcome to Revision 2013 Accounting Revision for November examination. Today we are going to deal with manufacturing, but before we deal with manufacturing, I just want to lay a foundation of to lay the foundation. Your goals minus your doubts equals to reality. We all have goals. So if you want to achieve the goals that you have, subtract or minus the doubts, and then it will be real. The goals will become reality. In manufacturing, when you manufacture or when you start the business of manufacturing, you are going to have 3 departments, of which is administration, the factory itself, and selling and distribution. With administration, it's where your business starts. When you order the material, there are receptionists and accountants or administrators to do that work for you. So it will start with administration, and then you order those material, you take them into the actual factory. That is where you're going to produce your finished goods, and then after producing, you take it to the other companies. That is where you'll be doing your selling and distribution. So under administration, we are going to have the following things. Anytime when you read a transaction and it has a word administrator, just know that you must take that to the administration department. When it has the name sales, take it to your selling and distribution. When it has factory, you must take it to the factory. So I'm going to start with administration and selling, because under the factory is also divided into 2 sections. Under your administration, any adjustment or any transaction that has administration salary, accountant salary, reception salary, they fall under administration. Office stationery, it falls under administration. Office telephone, office rent, insurance on office, depreciation on office. Everything that talks about office and administration, it must go to that account. Then coming to sales and distribution, the sales manager's salary. You see, we having administrator salary and manager salary. They go to different accounts. The other one is for admin and the other one is for sales. Then we go to the salary of the delivery man. This delivery man, it's part of, is delivering the material that must be sold. Hence why we put it under selling and distribution. Bad debts, you sell to those customers. It's part of selling and distribution. Advertising, you advertise to the customers that you want them to buy your product. So that is why you'll take it under selling and distribution. And then stationary cost. The stationary cost must go to selling, distribution. We having rent, that must be also belong to selling and distribution. We having depreciation on delivery vehicle. This vehicle is delivering or distributing the things that you want to sell. Then let's move on to the factory itself. I said the factory has got 2 aspects, of which it's a direct things to the factory and indirect things to the factory. These ones that are indirect, we normally call them factory overheads or manufacturing overheads. Under the direct part of factory, we are going to have the raw materials or the factory workers. Those things under the direct is the things that are directly involved. For example, I used to say there at school, if the cleaner did not attend to your school or it's absent at the school, since the main business of the factory of school is to teaching and learning, it means the classes will continue even if he's not at school, because he's not directly involved in the main concept of teaching and learning. But if an educator for accounting subject is not at school, it means for that day there won't be any product that will be produced under the factory, because the accounting teacher is directly involved. Then coming to the indirect factory. Under indirect factory, you will have factory for the foreman's salary. It is indirect labor. We have cleaning staff, wages and salary, also indirect labor. We have consumable stores, also indirect material. We have factory rent. In that previous part under selling and distribution, it is just rent. It is just rent, but in this case it is factory rent. So you must always check and compare whether is it a factory or is it admin or is it whatever. In the previous slide, we saw that we had a salary for administrator or for the bookkeeper. In this case, it's a salary for the foreman salary under indirect material, under indirect labor. Then we are having factory insurance, depreciation on factory equipment. So everything or every transaction that you read, when it has a factory, you must know that is part of factory overheads or manufacturing overheads. Now, these are the important concepts that you must know under manufacturing. In manufacturing, we have cost manufacturing and stock in manufacturing. Remember, cost meaning you have to take out your money to buy those things or to pay those things in order for your production to succeed. We're having direct labor. Direct labor is one of the costs that you have. We're having wages, salaries. They are directly involved in the production. That means as the owner of the company, remember in accounting, when you do accounting, you must take yourself as the owner of the business. When you do the direct, when you're talking about the direct labor, they are costing you, the owner of the business, because you must pay the salaries for those people who are making production for you. Then we have indirect raw materials. Under direct raw materials, like for example, when you're doing a table, you will need a wood. So that wood, it's when you buy a wood, it will be a direct material. It's issued to the factory, have been used to manufacture finished goods. That wood is taken to the factory to use it for you to produce what? A finished goods. And then we have in factory overheads, all other costs involved in manufacturing. Remember, when you have to manufacture a table, you will need labor. That means those people to do it. You will need the equipment, the material, and everything. So those factory overheads will fall there under costs that incurred in manufacturing. Then coming to stock in manufacturing. You have got 4 types of stock in manufacturing. The first stock, we call it a finished goods stock. A finished goods stock, it's a stock that is already finished, ready to sell. It's clear. Finished goods stock. It's ready to sell. It's already finished. You have produced it. Then coming to another type of stock. Factory indirect material consumable stock. This stock is not yet used but available to use. For example, when you want to sew the jerseys, you make a pile of a wool in your storeroom. That pile of a wool in your storeroom, before you remove it and take it to the factory, it means it is part of the consumable stores. It must be used or it must be consumed in order for you to be able to produce a finished goods. Then coming to the raw material stock. Materials not issued, stored safely for future use. The raw material stock is the stock that we have bought into the business and kept it there, and then you leave it there until, let's say for example, you planned to sew 20 jerseys. So you plant those 20 jerseys, and then you'll have raw material stock. This raw material stock will be kept there until you need it. If you want to put another 10, you'll go to the stock and take out those raw material stock and bring it into the factory. Then we have another stock, which is work in progress. Work in progress or work in process. It's work that is half done in a manufacturing process. For example, if you want to sew the jerseys, a jersey without the buttons, it's still work in progress. You can't sell that jersey because you must put in buttons in order for it to be a finished good. Then another aspect that you must take into consideration is fixed and variable cost. What is fixed? Fixed cost is the cost that do not change no matter what. And then variable cost that changes depending on the units you want to produce. I've made an example there. I said when you are renting a room, maybe in the location for a salon, to pay a fixed, you'll be able to pay a fixed rent. No matter how many hairs you have relaxed or trimmed, but at the end of the month, you're going to pay the same rent. Let's make, in that example of a salon, you know that in December, it's a high time for businesses like salon to make money. The rent that they pay in January to December, It's the same. It doesn't matter whether it's in December now, the rent must increase. No. But when it comes to the heads that they must trim or the heads that they must relax, there are many people are going to December because they want to look beautiful, but the owner of the business will pay the same rent. Okay, now here are the hints to remember before we can start working. Under manufacturing, you must remember the formats. The formats are very important. Some people used to say it's a skeleton because it is what you should put there before you can insert the amounts. Then we'll be having the format of a direct raw material. I will just make an example. People will be asking themselves, what is OPEC? OPEC is OPCC. You see that O is for opening, plus P is for purchases, plus C is for carriages, less another C. That C that you less is for closing. So it means you must know that format. You give it a word, you give it a word, a full name, saying direct raw material. When I want to get the direct raw material, I have my OPEC. This OPEC meaning opening, purchases, carriages, minus closing. So each and every note, in order for you to know it, or the format, in order for you to know it, you must give it a name so that you can remember it. You see, if you see OPCC, some people will think of OPEC. For economics people, OPEC, they will think it's OPEC. But for you, you'll know it's opening plus purchases, less, plus carriages, less closing. Then coming to the format of production statement. If you see the format of production statement, it's only done for you on the other side. In some instances, you would find that they say you must calculate the cost of production of finished goods. That question is the same as doing what? The production cost statement. So you must know the terminology or the terms that are used in order for you to reach to the answer. So the production cost statement format is here on the other side, where we are having the direct or the raw material, the direct labor. You add the two, they will give you the direct prime cost. And then you will have your factory overheads. You also add there the factory overheads. You will get the total cost of production. Then you have your work in progress at the beginning and work in progress at the end. Then at the end of the statement, you will have the cost of production of finished goods. So you must be very careful. You must learn the formats before you can do anything, because in other instances you will find that the formats are awarded marks. So you must know the skeleton before you can put a flesh into the skeleton. So very importantly, know your formats, know how they are done, and know your skeleton as it is in order for you to make it. Then without wasting time, I just want us to focus on the few. Let's now engage in some previous question paper to address the topic of manufacturing. In manufacturing is the very easy topic that you can score marks easily on it. You must just know the format. You must just know opening, especially in indirect labor. You must know the opening, the purchases. You must know the skeleton. You'll get the marks. It's always there. There is never a question or an exam that doesn't have manufacturing. So let's get going. I'm going to start with the very same paper that you wrote in September 2013. Here it's the paper that you wrote in 2013. It deals with manufacturing. The question 1, which was 40 marks. So that is why I said it takes marks and you can easily collect marks. 40 marks out of 300. You have scored. It's a lot of marks. So let's check. They said choose the most appropriate explanation from the column B to match the concept of A. Write the letter A to F next to the appropriate numbers. Then we are coming to fixed cost. What is fixed cost? Can it be this represents the number of units that needs to be purchased and sold to cover all costs, but not profit it's made. When they're talking about no profit it's made, what comes to your mind? Remember, it is something else. Break-even point. It means it's something else. No profits made. It means this number A will be your break-even point. And then there are expenses incurred to run a factory, but none of them are directly involved in making a production. You see, they are done to do what? To do a factory, but they are what? They are not, none of them are directly involved. They are not what? Directly involved. It means it is what? A factory overheads. They are hints. A factory there and a factory there. Why? None of them are directly involved in making a product. Okay, then moving to the other one, this represents the sum of direct material. This represents the sum of direct material, direct labor, and factory overheads. Do we have anything like that here? No. Fixed cost, this one is already taken out, and this one it's already taken out. So you don't have a C in here. Then this cost increased when the factory produces more and decreases when when less is produced. Your D can be what? Your variable. Why? They change. It means this cost increase when the factory produces more and decrease when less is produced. It means it is variable. It is not constant. So it increase and decrease. That means the movement of increasing and decreasing is variable. They go up and down. And then coming to this cost do not change even if the quality products produced by the factory changes. They do not change. I said fixed costs are the costs that do not change. So it will be your fixed cost. The sum of direct material cost and direct labor cost. What can this be? It's your primary or direct cost. The sum of direct material cost and direct labor cost. Remember, you call them prime cost or primary cost or direct cost. So it means when you know the skeleton of a production cost statement, you will be able to answer this very question. So let's move to the practical part of it. The information provided below was taken from the books of that company. The factory manufactures school bag for primary school learners, amongst others. Prepare the following notes to the production cost statement. Remember, here is where you use your OPCC, direct material cost. Direct material cost, use your opening, your purchases, your carriages, and your closing stock. Remember, you must minus the closing stock. So we are going to do it here. How much is your opening? You are going to do it in this case. How much is your opening? Your opening will be, you check here. This is another additional information that is given to you. You have the information, the following balances appear to the ledger at the beginning of the end of financial year. You see your raw material stock, it's 66. When? On March 2011. And February 2011, it's 99. Some of the learners tend to confuse them. When does your financial, when it's between 11 and 12, which one comes first? It's 11. So this means 11 is your opening, 12 is your closing. So that is where you will take your opening, it's 66,000. And then we said we are using OPEG, opening, and then it will be your purchases, opening, it will be your purchases, and then it will be your carriages, and then it will be your closing. And then your opening, it's 66. You have seen that your closing, it's 99000. There you are. It's your opening 66. It's your closing 99. Then you come to your purchases. Where are you going to check your purchases? You check additional information. It says raw material purchases. On credit, 730. On cash, 280. So you add the two, the one for credit and the one for cash, because all of them are your purchases. Therefore, when you add the two together, it will give you 1,010,500. This is your purchases. And then your carriages, additional information again, and check your carriages. Let's see. Number 2, carriages on purchases of raw material is how much? 30,500. So you add the two together before you can subtract your closing. Remember, it's OPCC less closing. So you say your opening, your purchases, your carriages. Then you add them together. They give you 1,107,123. 1,107,000. Then you subtract your closing, because remember I said OPC minus C. Therefore, your closing will be 1,008,000. 1,008,000. So this is just an example where I was showing you that you can use your OPCC in this way: opening, purchases, carriages, and then you less your closing of 99,000. Then you'll reach to that answer. Then I want to move to the second question. Second question, they say you must calculate the factory overheads. Under factory overheads, that is where it will need you to go to additional information. Additional information, you have already used your opening, and then your work in progress, you are not going to use it now because you have not got the thing for the production cost statement. Finished goods and indirect material. You need the indirect material. Remember, I said it forms part of the factory overheads. That is where you must take your indirect material. That will be the first entry under your indirect material. Indirect material, you will be having opening plus purchases, opening plus purchases less closing. It's just opaque in this case. Remember, on that one, it was the calculation for the first question, which indicates that you must calculate direct material cost. Here you are calculating indirect material cost. There is no carriages here. Then your opening will be, you come here again to the additional information. Your opening will be this one, because 2011, remember, comes before 2012. It's your opening, it's your closing. Your opening will be 11,000 and your closing will be 5,500. Then you must check what? Your purchases. Let's move to the question to see the purchases. Carriage on purchases, we are done with that one. Indirect material bought for cash was 80,000, and then you having 70 for the factory and 30 for the office. Remember, you are doing this for what? For the factory. So if you're doing it for the factory, you must calculate on 70%. Now you do it like this. You say the amount is 80,000. You say 80,000 multiply by 70 out of 100. How much? I have my calculator. I get 80,000 multiply by 70 divide by 100. I get how much?